Hi there, this is Erik Egelko, and I'm super excited to present episode number 7 of the Easy Deals podcast. All right, we are back. This week, I am super excited to present a very special guest. I have Brandon Warnke, who is an account executive with Talimar Financial, San Diego's premier hard money lender. Brandon, welcome to the show.
Thank you, sir. Appreciate you having me on.
Yeah, so Brandon, for people who are unfamiliar, what is a hard money loan?
Hard money is, long story short, it is alternative financing for investment properties. So we are the guys that can step in quick when you have a, functionally obsolescent property that's maybe like super run down, that needs rehab, or if let's say there's a bunch of holes in the walls, there's a missing water heater, unsafe, repairs need to be made that are unsafe to the bank. That's where we can step in and we can fund, a significant portion of the purchase price and 100% of the renovation, capping at a certain percentage of the after repair value. And it's quick too.
So for all of you guys that watch these flipping shows, these are the folks who are given the financing to the folks on those shows. Excellent. So before we dive more into your guys' role in the real estate industry, tell us a bit about your background and how you got into this.
Yeah, so my background, I've been in hard money for just about 3 years now. I actually, a little bit longer if you count the hard money lending conference that I was working for part-time. But I used to work for a conference called Pitbull Conference. Now it's called NPLA, National Private Lenders Association. There I kind of got to know the players in the game, kind of where the capital for hard money comes from. And while working there, I ended up getting in good with one of the sponsors. And of course, COVID hit. I had my whole midlife crisis, and I was I had some reserves. So I was like, you know what? I'm destined for more. I'm like, I can do it. I can do it. So I quit my job. I was writing service for Honda here in Claremont. And I was just completely burnt out. So I went to work for this company. Made absolutely nothing for the first year and a half. So I cut my teeth. But I treated it as an internship. So I try not to think of ever losing anything, but just always at least I'm gaining knowledge. I may not be making a ton of money, but I'm getting a free education. In hard money and kind of how to run behind the scenes. It was a super small team. So I got to learn kind of, where the money come from, what you have to do with the loan, once you originate it. And I ended up, long story short, just learning everything I could. And then I learned a little too much and found out the capital really wasn't there when I was told it was there. And so I ended up leaving there and finally going over to Talimar. Because Talimar is great because it is a private debt fund, which means, without getting kind of too into the weeds here, we don't have to sell any of our loans off like a lot of other lenders have to do these days. So we balance sheet everything, and that gives us a lot of flexibility to kind of make our own boxes, so to speak. So we'll have certain boxes that we're going to check off, good credit, history, stuff like that. Whereas some of these other lenders, they it's more like a borderline bank underwrite. Whereas we're more true hard money, where it's a lot quicker.
I'll tell you one of the things that I like about your guys' operation, and having been in this business for nearly 10 years, is, like you said, there's a lot of people who sort of represent themselves as having the money to lend, and really they're in the mortgage brokerage business more than
Mm-hmm.
actually lending money. So working with a lender who is using their own money, that they have so much more discretion
Mm-hmm.
and confidence. So I have found that you can execute way better on deals when you're
Yeah.
actually dealing with people who aren't,
Well,
one person in a series of middlemen.
yeah. Well, the thing is, like half of these guys, I think, that are actually working originating loans for these hard money lenders, they don't know where the money comes from. They have no idea. So like, whereas like with Talimar, I know exactly what we can underwrite to. Whereas at the other company I was with, like the underwriting guidelines were hinging on the secondary market, like who's buying what notes, and so the underwriting would constantly change. It was a moving target. So I'd be calling you like one day, like, "Hey Eric, like we're good with 20% down, but something happened in the capital markets, like kind of with the Feds or whatever, the interest rate went up. Now you have to put in 25% down, and like people didn't like that very much. So that got old real quick, and so
Yeah, no, I had an experience last year. We were buying a deal down in Spring Valley that was like
yeah,
a probate situation, and it was just in terrible condition. And I get all the way up to 2 days before the closing. I had waived all my contingencies, and
mm-hmm.
the lender I was working with just the same thing. Oh, with the capital markets, the war in Ukraine, all these kind of silly excuses
Yeah.
somehow influencing the loan for my deal. That we ended up just having to buy that one cash. And frankly, I wish I would have reached out to you guys at the
Yeah,
time.
we call that in the business getting retraded.
Getting retraded. Yeah, it doesn't just happen with agents. It
That's
happens
terrible.
with lenders too.
Yeah, all the time. And then we get retraded too. Like, oh, the borrower will be like, oh, like my budget is not 100, it's 50. So like, oh, well, you just retraded me. So like now the ARV is going to be different based upon like a 50K budget as opposed to when you told me it was 100. So now we got to go back and just kind of like relook at the deal.
So you're dropping a bunch of fantastic vocabulary here. So for people who are newer to the business, the ARV, what is that?
ARV stands for after repair value. So that's what the property is going to be worth when it's all fixed up, nice and shiny.
So when people are establishing this ARV, how do you make sure that these numbers are realistic?
It's a lot easier than you think. The easiest way to do it is just to go on Redfin and look like at a price per square foot. Just pull it up, type in the zip code, go through the filters, type in 3-bed, 2-bath. Go between like, say you have a 2,000 square foot house, go between like 2,500 and like 1,700. And then if your price per square foot is 3 times higher than like the average price per square foot, then you're a little bit off.
And how are you guys underwriting for these proposed rehab budgets?
So we like a minimum like price per square foot we like to see is like $35 price per square foot. And that's like pretty fair. And that's considered like a light rehab. So when we underwrite the renovation budget, we ask for just a simple description of what you're going to do to the property. It's called a scope of work, SOW for short, and then a budget, just allocating like certain dollars to certain phases. So like phase 1 will be demolition. How much is that? Phase 2, framing. How much is that? And then so on.
Are you guys seeing any softening in the market in terms of these things on the resale side of it? Do you have any payoffs that are taking longer than you anticipated?
Not right now. Like, so this month, actually, we're getting a ton of payoffs in. So I'm already thinking about like how much cash I have to move like tomorrow and like this month. So that means we're making good loans, but also the market's still healthy. Like we're seeing a lot of payoffs come in, and we're also seeing like investor capital come in. So it's good times. Like flips
Yeah.
are still alive and well.
Yeah, I would say
San Diego.
on the investor capital side as well. I've been seeing the same with my business is that in like volatile times, people like certainty. So investing in debt is a lot safer, it seems to many people, than investing in equity. When you guys are soliciting prospective investors, what does that presentation look like?
So I'm strictly on the origination side, but as of probably tomorrow, my funds are actually be going into the fund as well. So I'm going to be an investor. But I guess that's beside the point. But there's a lot of different ways you can be resource investors. People like looking to invest through their IRAs is one of them. You have to be accredited investor, which means that you, don't quote me on this, but I'm pretty sure it's 200,000 a year. You have to make 200,000 a year consistently, or have a net worth of $1 million, excluding your primary, and that will allow you to invest like in a mortgage fund, or a REIT mortgage fund.
Yeah, no, we take the same position with our lending business, is that it's, the purpose of accreditation for investors is that you don't want, someone's grandma losing her savings. Is that has to be people who have excess capital and are willing to take higher risks. Speaking of higher risk, you post fantastic stories on social media. I saw one that you had posted earlier this week about a fire at one of your projects. Can you tell us about that?
Yeah, so that was an interesting one. So that was like, I might do like a special episode of like when site visits go wrong. So this is definitely like a site visit that went wrong. I actually knew about it, of course, before going in, but yeah, it was a tricky one. It's not finalized yet, so I don't know like really how much info I can get, but it seems that somebody snuck into the back and there's like a little barbecue area, like kind of attached to the side of the house. It's very strange. It's like built in and it's brick. It seems like someone snuck in there. I don't know if it was a kid or whoever, but they like seems like they tried to start a barbecue or something that's right where the fire originated. And it just caught fire on the side of the house and ended up the whole inside kind of like in the living room was trashed. And the roof, they had to jump up on the roof and cut holes in the roof. So that was it's becoming a little bit, it's tricky to navigate the insurance world because like, do we give the check to the borrower? I don't know. That's something for the credit team to figure out. That's how they make the big bucks. That's why they get to make the decisions. But I went there, chatted with the borrower, and he's confident that he can finish the project. He's got plenty of reserves to finish the project. So seems like it's going to be a good fit, but just make sure your insurance is in place.
Yeah, absolutely. I mean,
coverage.
I'll tell you, being on the property management side of things, there is like insurance is a huge fiasco in California right now. Speaking of borrower relationships, it seems like you guys have a lot of repeat customers in terms of people getting loans. Why do you think it is, and why are people preferring you guys over other hard money sources?
I think they like us because most of my clientele, if not all of them, are here in San Diego. I have a couple guys and girls up in LA and like one or two in NorCal. But they like it that we are local. We can go out to the project if we need to. And if they have a problem with their loan or have any sort of questions at all, they could come to our office or just call us. It's not like you're going to call like a big institution or a bigger lender and just like be put on hold and like, oh, let me see who's handling your loan and like go through like 5 different people before you actually talk to somebody. If you need like a draw request or change order on your draw, then you just, call me and then we just make it happen.
So talking about the loan process here, so you guys fund the initial loan and then you also give additional capital for the renovation phase of it. Give us a breakdown of what that process looks like.
Yeah. So what we can do, like talking numbers. So based upon your experience, like if you have 3 or more flips in the last like 2 years and been on title, like it's not something where by being on title means like you've signed loan docs, you're in the LLC, your name's on it. It doesn't mean that you were like a partner for your buddy's flip or your JV, on a flip in Florida. That doesn't count. So if you have like 3 or more in the last 2 years, you can get up to 85% on the purchase and then 100% of renovation, assuming that amount doesn't exceed 75% of the after repair value. Even if you don't have that experience, which is fine, you'll still get great leverage, but it'll be like 20% and you'll cap at 70 ARV. But once you get to 3, then you get, better leverage.
I mean, you
Yeah.
should be buying it at 70 ARV
Yeah.
anyways.
Anyway, yeah.
So the
It's more for the guys that are trying to scale, like have multiple projects and
Mhm.
have like less down because it's spread out.
So the construction process here, the borrower is advancing cash to do the work, and then they're getting reimbursed by you guys.
Yeah.
What does that process look like?
Yeah. So you need a little bit of working capital to get started. But let's say like a general rule of thumb is like 100 grand rehab is going to be broken out into like 8 phases. You can have more if you like. It's just if you have the capital to float in between those, then you can even shorten it if you really want to. We like eight's a good number to work out a draw schedule. So we'll take that 100K and we'll break it up into 8 parts. Like first part will be like demolition, second part will be framing, third part will be drywall, etc. Once you complete each phase, then you just submit a quick draw request through your borrower portal and take a video, and then we just wire it to you, straight to you. There's no third party inspector. There's nobody like going out there with like giving you a certain percentage of like line item completion. You know, it's very easy. We get praise on our draw process like all the time.
Yeah, no, it's feedback I've gotten from people a lot is that there are these big national hard money companies who advertise and have sort of very generous claims about what they can deliver on, but then like you said, you're sitting on hold for some 800 number for someone
Hopefully you're gonna
who
get
has never even
reimbursed.
heard of you.
Yeah.
So obviously pricing is subject to change as the market fluctuates. We're in July of 2024. Generally speaking, what does your pricing look like?
As of like today, like I guess the last like handful, I say 5 to 10 that I've quoted, fix and flips, they've been like in the 1.5% range, sometimes 1.75. Interest rate 10.5% is normally pretty consistent right around there. We're usually under 11%, and we're always under 2 points. Like it seems, yeah. Unless
Yeah,
it's like a really like weird deal.
Yeah, I mean, I would say that is fantastic pricing.
I think it's great. It's very competitive. I mean, like you're getting like speed. We can, there's a lot of lenders that claim they can close in like 5 to 7 business days, but we can actually close in 5 to 7 business days. We could even close faster if you really wanted to, but the holdup is really never on us. Like I hate to brag, but it's never on us. It's always on like escrow or title. I'm sure my title reps and escrow is gonna love this, but
it's the same for.
It's just it takes time to order the prelim and just get the docs in order. I mean, so just really depends. Like we can underwrite a deal in like 2 days or less if we really really want to, but you're not gonna get like premium pricing. Like you're gonna have to pay a little bit more for the turbo close.
Yeah, you had a post a couple weeks ago about someone who their lender bailed on them basically at the closing table, and that you guys came and closed in like 3 or 4 days or something. What were the specs on that deal?
Gosh, it was a relative like medium sized deal. I think it was like a 750 purchase price. It was like a 60K reno, and capped at like 70 ARV. We didn't even charge him that much more. It was like I remember specifically it was like 1.75 and like 10.75 on the rate. And so he was on it. He got us everything we need. We were ready to close. I think there was like a small delay with like title, but that was it. It was done. He was happy. So he's a good dude.
That's incredible. I saw a post from you with some of these great trophies. Brandon is the most productive person in his office. I'll have let's throw a picture up on the screen. What kind of volume are you handling on like a monthly basis?
Well, so the last like 2 months have just been absolutely insane. Did like 13.2 personally, 13.26, and then the month after that was like 8.4.
Wow.
So that's pretty wild.
Yeah, I mean, $20 million in loans, that's a far cry from working service at Honda.
Yeah, it's a big change. The company did 20 million 2 months ago, and then I think we did like about just over 10 last month. So it's been good. So yeah, we're expanding. We're trying to break into LA and NorCal. So Yeah, I would love to get into that market.
Being that you're around so many people who are doing these fix and flip projects, what has been the commonality you've seen amongst the most successful people who are flipping houses?
The commonality I've seen with the most successful flippers are being realistic on their ARV and their budget. So if you have a realistic ARV and you have your how to comp, that's usually like those guys do the best and girls. So
Um,
a
it,
lot
it-
of successful flippers are actually like some of my best clients are female. There's
Interesting.
there's there's a lot of guys that are flipping, but there's a lot of strong, female flippers out there that are really killing it.
It's interesting that you bring that up because I would agree with you. I think in some ways that women have an advantage in the acquisition
Yeah.
phase of the process, which finding the deal is the hardest part of flipping houses. Fixing it up and reselling it is pretty cookie cutter, but oftentimes you're dealing with people who are in some kind of a distressed situation, and I have found that women are much better at being empathetic with the seller and making that kind of connection. My wife oftentimes is my secret weapon when we're looking at deals that if I deem it appropriate, I'll have her sort of come into the fold, and everyone loves her, and we seem like much less of sharks
Yeah.
when I bring
Yeah.
her into the mix.
What's the wife do?
She works at our company.
Oh, she
She's
does?
the director of property
Oh,
management.
nice.
So she
Oh, very cool.
oversees all of the bookkeeping and the maintenance, and she's kind of our construction expert when we are doing rehabs, whether it's for a hold or a flip. She's the one yelling at the contractor about the punch
Yeah.
list. Her
Yeah.
dad was in the construction business in Colorado, so
Yeah, that's
she's
key.
real familiar with that kind of stuff.
And once you get the deal, it's like project management is like I think probably the hardest thing.
Yeah, it's the velocity. I feel like is what separates kind of the good from the great. Is that if you can turn a project more quickly, you pay less in interest, and your profit goes up.
But real quick though, like circle back, I just ask you, have you ever done like how many hard money loans have you done?
So I just originated my third one
Oh, okay.
about 2 weeks ago, just using my own money. But we operate on a much smaller scale than you guys. My format is I front the whole thing with my own cash, and then I backfill with investors as I see appropriate. So I have like limitations on capital in terms of what I can put out at once.
Right.
My first one's about to pay off in about a month here, so that'll be pretty exciting. My investors
Do you have any
are
details
recently-
on that? Like what?
Yeah, so my niche is in doing second trust deeds.
Okay.
I have found there's a ton of competition with other hard money companies doing first that I'm not. I like to as Sun Tzu said, you only fight the battles that you can win. So I am not looking to go head to head with Brock in a capital contest. Whereas I have found that basically no one is doing second mortgages, and that really my advantage is I got 10 years of brokerage experience. So I know the values of the property super well. So I can just look at a deal and, not order an appraisal and not do really any kind of underwriting at all. With the seconds, we only loan on stuff with tons and tons of equity. So like we
Do you
close.
ever do seconds like for flips?
Mostly it's so it's different use cases. So we did one at the beginning of this month on an apartment complex in Pacific Beach, and the guy is preparing to sell it, and he has 2 units left to rehab, and so I gave him a second for $100,000 to finish these 2 units. But in that deal, collateral was worth 3 million. The guy had a first for 1 million.
Yeah.
So it
that's
was
solid.
like, there's tons and tons of there. It was no, I'm not really fond of flippers as borrowers because they move a little bit too quick, and they're a bit too savvy. Another great use case, I did a deal in La Mesa for someone who was building an ADU. A lot of folks got these incredible mortgages during COVID that are, like sub 3%. And so that they don't want to lose that interest rate. And so they'll take on a second mortgage, and it makes a lot more sense for them. All right.
Well, seconds are great. They're for flippers that that we fund, they're a pretty powerful tool. Like if you can find somebody that's willing to do seconds, like because we allow junior financing behind our
Mm.
loans, so it's people are out there using like other people's money for the entire thing. So they'll find somebody to fund the 20 or 15% down
Hmm.
and the interest carry as well.
Wow.
And they just cover it, and they'll pay them like a percentage of the profit when it's done, or just they'll pay everything once it's all sold. You can make them.
Yeah,
There's some funders out there
yeah,
making
I would say
some
that's almost like
decent
more of a
coin.
preferred equity
Yeah, I
position.
mean, it's risky, but it's
Yeah, no, I would say for my
yeah,
lending business, I go incredibly low risk, so
yeah.
that it's like while my returns are not, super impressive, the risk adjusted return
Hmm.
is what people are going for. We've talked a lot about all of the sunshine and rainbows of doing these kind of deals, but obviously it doesn't always turn out that way.
Hmm.
Tell me some horror stories. What are some of the catastrophes you've seen in the house flipping business?
Uh, Gosh, I mean, to be completely candid, like all of our loan, I mean, majority of my loans have been pretty good. I've only heard stories of people getting upside down in their renovation budget, or they didn't budget enough. Found some foundation issues, or something out of the ordinary. Um, I mean, I don't really have like too many horror stories yet. Knock on wood.
No, yeah,
I
absolutely.
don't want them either, but
Before we came on air here, you had mentioned this story where a guy was trying to basically
yeah,
dash with the cash.
yeah. So there's a guy. I was scrolling through my Instagram one day and I see this guy's face pop up. Like it's public knowledge. His name's like Cody Holmes.
Mm.
He was like a COO of like Shangri-La Construction. It was probably like my third or fourth month with Talimar, and it was a great deal. The guy was super on it, like just getting everything we needed, like wanted to close fast. And all of a sudden, he just like completely ghosted at the closing table. And we were just like, what happened to the guy? Like it's like it was great. It's a great deal. Like, why isn't this guy like at signing these loan docs? And never heard from him. And next thing you know, like Instagram pops up, and Cody Holmes is like arrested for embezzling. It's a long story. I don't want to get into it too much, but you can look it up. But
Yeah, no, that's
he was like using these properties as collateral, and buying his girlfriend like expensive trips and you know gifts and stuff. But there's like a podcast I heard where it was rejection is God's protection. So if I would have originated that loan, like probably like one of my first handful of loans with Talimar, then I never would have heard the end of it, and probably our requirements probably would have tightened up quite a bit, due to
yeah,
that.
something I say to Max often, my business partner Max Reynolds, is some of the best deals are the ones that we pass on,
Yeah.
because
Hmm.
it's I think success in investing is about just hitting singles and doubles, and
Hmm.
not striking out. So
Yeah, absolutely.
it's like one bad deal can set you back five good
Yeah.
deals.
One thing I'm seeing like right now actually that just kind of came to mind is higher price point homes, like in like the over 2 million, like 2.5. Those are taking longer to sell, and a couple of them are kind of selling for below like
Mm.
what we underwrote to. So anything that's like usually like in the 1 to 1.5 is like it's moving pretty quick. Yeah.
Yeah, it is pretty insane that the median home price in San Diego is now
It's a
over
million.
$1 million. I mean, it's. I think that we're going to become like Santa Barbara or Santa
Yeah.
Monica, where it's just basically a haven for the
Yeah.
affluent.
Once you get into that like 2.4 plus 2 million plus, and you're in like these like conventional terms like super jumbo, and rates start getting crazy high, and you know requirements start to tighten up, and people aren't qualifying for that stuff, it seems. So
Yeah, no, it's
yeah.
some of the ones that my wife and I were looking at a house in Poway that's sort of like our dream home, and I looked at the mortgage calculator and it'd be like 30,000 a month or something.
That's
It's but
absolutely
they're
crazy.
still selling. I mean, there's a lot of those people here in town. Um, In terms of how people can help themselves with working with you guys, what can a borrower do to expedite the process and be best prepared?
Yeah, that's a great question. So to get prepared is to, of course, like get pre-qualified. It's like everybody says it, but get pre-qualified. Get set up with what's called a borrower account. And once you're set up with that, there's no credit check to do it. I think you recently came on board. So now, once you are set up with that, you have the power to like go write offers. You can do property specific proof of funds letters, or you could even do like a general letter of credit. And then you're off and running. Once you get something locked up, then you just go ahead and submit the official loan request. Give us a purchase contract, a budget, scope of work. We want to see an asset statement. We're going to pull credit. Assuming your credit's like 675, around there or greater.
My credit is much better
Yeah,
than
mine's good too.
that. Anyways, go ahead.
And then we submit the final package to the underwriting team and you get the clear to close. And we do it. Well, before that, we do internal valuation if it's like 1.2 million or under. And then once we agree on the ARVs, assuming you've done your homework on the ARV and like you're not overinflating these values, as soon as we agree on that, then, which normally we do, then you're at the closing table signing loan docs and that's it. It's a very quick process, very, very quick. It's fun. It's like you don't have to wait 30 days to close something. It's like the one thing I like about this job is like you could be having like a slow month or a slow week, 2 weeks, and then all of a sudden you get like 3 deals in that day that need to close in a week. And then boom, you're back on track. So
Yeah,
it's pretty fun.
it's. I can tell you, there's tons and tons of benefits to having this abbreviated process. Anytime I've gone with a bank for a conventional loan, it's like by the end of it, I am so sick of my loan officer from just like the excessive amount of doc requests. We had the house that I live in La Mesa was like a fixer upper deal that we decided not to flip and to keep. But I remember the loan processor on that one asked us for more docs post funding. And that we were just kind of like, hey, you give us the money, it's too late.
Yeah. It's fun. I mean, I think for conventional, like if you set it up right and you're like forward thinking and like get everything like pre-qualified and get everything in there, and your credit's good. I mean, conventional loans are a great tool for these as well. I mean, before I came on board with Talimar, I was doing conventional loans. I was only doing it for like 6 months, but we had like a $1.3 million purchase close in like 17 days.
Wow.
Which is pretty good.
Yeah, I mean, that I would say you're way above average compared to the industry.
But being like a good loan officer, or I was a loan officer at the time, I had everything like lined up. I knew it was a good buddy of mine. I knew he was hunting for a property. So I got and it was self-employed. So I got everything I needed like teed up. So just got to be, if you're trying to get into like originating loans, just like be proactive and like make sure you like just think of like the unexpected, like expect the unexpected always. And just like grab every document you can and just like, hey, like, put that in your file.
We've talked here that in terms of the real estate investment process, it really comes down to finding that juicy deal.
Yeah.
In terms of deal flow, the clients that you're working with, how are they sourcing these leads?
So they source them through agents. So they'll have like a network of agents that will, shoot them deals, like stuff that they think is a good fixer up opportunity, or wholesalers I'd say like majority of my business right now is a wholesale deal. So a wholesaler is somebody who goes and finds a property, gets it under contract for, a premium price, and turns around and assigns it to like an investor for like an assignment fee. Usually anywhere from, I've seen assignment fees like crazy high, like 100, 200. I've seen 350 before.
Jeez,
wild.
Louise. Wow.
But the deal still pencils. So I mean, like, it's as long as it's a good deal, good collateral, then we're okay with it. Some lenders don't like wholesale fees.
I'll tell you
So
my grievance about wholesalers is that they are super optimistic on ARV,
ARV,
and that
exactly.
they are super conservative on their rehab budget. What's your take on them?
Yeah. So you, after working with certain wholesalers, you know who you are. Uh, you just confirm that ARV. So what I've done like recently is like they'll send me deals or there'll be a list of wholesale deals. So I'll go through that list and see like, oh, this looks like a good one. And then I will kind of pre-underwrite it. I'll do like my evaluation. It won't be Talimar's official evaluation. But I know like kind of what the team underwrites to and what they look for. So then I will take that and then I will shoot it off to people that have, borrower accounts set up with me. So I'll be like, hey, Erik, like there's this one in Vista. I don't know if you got that one today, but there's a good one in Vista. It's like, I think it was like 600 purchased, needed like 150K. And then the ARV was like 8 or 850, something like that. But it looks like a solid deal. Obviously do your due diligence and you're going to walk it first. But I'm like, hey, if you can get this done for 70 dollars a square foot, which is pretty realistic for a reno, then like it's a deal and we want to lend on it. And you're already signed up with us. So, let's just do it.
So
Yeah.
not only will they loan you the money, but they'll bring you the deal.
That's what I'm trying to do is like bring people deals. Cause like a lot of these flippers are too busy managing their projects, staying on top of things, ordering supplies, picking finishes, whatever they're doing. They don't have time to sift through this huge list of wholesale deals. And a lot of people are like leaving money on the table because some of these deals are good deals.
For someone who's looking to getting into the flipping business and is trying to better understand the opportunity, what would you say is like a typical net profit on like a starter home kind of flip?
Like right now, we see anywhere from like the typical flippers. It depends. Like if you're like most of these flippers are also agents too, so they don't have to pay like listing fees. But we see anywhere from like 5 to 10% return on cost,
Okay.
which is fair. I mean, you can get more if you're listing it yourself. Too.
Okay. So if you do a deal for 800K, you're gonna make a 40 to 80,000
Yeah,
in profit.
yeah,
What
which is not bad for if you can do it in 3 months. That's killer.
Yeah, and if you got multiple projects going at the
Yeah,
same time, even
it
the
makes
better.
money.
What are like big red flags in properties that you would recommend that people avoid when evaluating these deals?
Big red flags are going to be, location is like the main one. If you're next to a freeway and you're comparing it to something that's not next to a freeway, something like that is a big red flag. Um, it's more like budget, like making sure your budget's on point. Um, if you're telling me it's like a 2,000 square foot house and you're gonna do a studs out remodel and it's only gonna cost you like 50, 60 grand, is then we know like you don't know what you're doing. So make sure your budget's in order, like realistic, like and always pad the budget. As far as other red flags, what are some other red flags that I see? It's always overvaluing ARV. Like if you're trying to set the market, that's great, but you're gonna have to come in with more down if you want to set the market on the purchase. It's a gamble.
Yeah, no,
You know?
I have I try to underwrite to like the lowest comp
Yeah.
available because the name of the game is just don't lose money.
Yeah, absolutely.
Yeah, no. Speaking of red flags, one of the advice that I often give folks is you want to find properties that have fixable problems. You can redo a kitchen, you can redo a bathroom, but if it is, next door to a gas station, you
Exactly.
can't move it.
Gas station, of course, fire stations, stuff like that. Definitely want to avoid that. So location's key. Busy streets. If it's on like a double yellow road, it's gonna take a while to sell that. Parking. Like if you're next to your buddy's 8 unit ADU project, um, parking, you, and it doesn't have a garage, something like that, something random. You want to make sure like you have a place to park. silly stuff.
Yeah, it's funny talking about the ADUs and the parking. We had a meeting earlier this week. This guy is developing an 18 unit building over near University of San Diego with zero parking in a neighborhood that's all single family.
That I wonder what is. Do you know anything about it? Like, do you?
I mean, hopefully we're going to be doing the property management for it, and our angle is going to be student housing.
Oh, okay.
It's near the college, so
Yeah.
hopefully we get lots of people riding bicycles.
Is it already built?
No, so he's in the permitting phase right now.
Okay.
But it's
That's gonna take a while. I'm curious what his when he does get an appraisal. I'm curious what his after build value is compared to the appraisal, because we did a couple of the appraisals, came in lower than expected, and they got dinged for not having any parking. There's a couple other things, and then the units were, I think, smaller than 500 square feet, like 1.1. So the rents were lower than expected, so they got dinged on that.
So you guys lend on all kinds of different collateral. I know you guys do multifamily projects, commercial projects. How does the underwriting vary by asset type?
It's all common sense underwriting. For, let's say, like what ground up construction, like this ground up construction that we like is when there's an existing structure already on the house and you got plans and permits for, like, say 5, 6, 7 ADUs. That's the type of stuff we like to do for ground up. So the underwriting process on that is like, we're going to want to get an appraisal. We'll go up to 65% of the after repair value. You will subtract your build costs, and then we'll want to build in a payment reserve, usually about 70% outstanding loan balance. So you'll subtract that. The remainder of that will go towards purchase or payoff of the existing loan if there is one on there. And then for experience, we do like to see that you've done like at least like 2 or 3 projects in the last like 3 years. It's okay if you haven't done ground up, but you have need to done like more flips, like with like decent size rehab, not like 20, 50K rehab. I want to see like 100K, like maybe something like if you've added square footage or converted a garage, that would count as experience for us. And then liquidity, we want to make sure that one, it's going to have a payment reserve, but 2, like we want to see that you have some cash in case something does go wrong. You run into any roadblocks, that you can overcome those roadblocks with liquidity.
Yeah, no, it's I like that expression, common sense underwriting.
Yeah, always common sense.
I get some loan apps, usually through mortgage brokers. I notice mortgage brokers send the least qualified borrowers, but like sometimes it's like so obvious that this deal is going nowhere. I had a guy reach out that had the borrower had existing hard money loans and wanted a second. And I asked him, what's the money for? And he's like, oh, he's in a lawsuit with his partner and he needs money to pay the lawyers. And I'm like,
oh, yeah, perfect.
Dude, not for me.
Yeah, sign me up. You always got to be careful. Like when they're trying to refi out of another hard money loan, like they're burning through hard money lenders, it looks like. So you don't want to be stuck with the bag.
Yeah, I sold a strip shopping center down in National City last year that you guys did the loan on. Highland.
Oh yeah.
Yeah, 2305 Highland.
Yeah.
And it was it was a great deal, but it was not something that was going to qualify for conventional financing. And when I got the letter of credit with the offer, the fact that it was Talimar gave us a lot more confidence.
Oh, nice.
And moving
that was my first commercial loan.
Oh, wow, you're a loan officer on that.
Yeah.
Hell yeah.
That was my deal. I was brought to us by a broker. Yeah. That was good. It's a good one.
So talking of deals, tell me what's the biggest deal you've ever done?
So pre-Talimar, the biggest deal I've done was a strip mall in San Marcos. It was like $4.5 million. And then that was an interesting story because that's when the commission calculator changed. Kind of like in the middle of the closing with the old company. So I was like,
I was
like, all right. I was like, so this is how it goes. So, and then also I'll always remember that one. That was my biggest deal. The Second biggest deal, the biggest deal at Talimar was 3.8 million luxury fix and flip in Rancho Santa Fe, and we closed on that one. It was I think it was like a 4 or 4-1 purchase, 850K reno, and the ARV was like 6.9, something wild. And then we closed on that one. I called him to say, hey, thanks, appreciate your business. Like, it got a little stressful at the end just because like escrow and title, like they missed a doc or something. Like something needed to be signed, and like everybody was, flipping out for just a minute or two. But I called him and said like, hey, thanks for your business. Like everything went it went great. A little hiccup at the end, but we got it closed. And he's like, oh, I got another one for you. And I was like, oh, okay. I was like, well, let me see if we, how the payoffs are looking. So it was like perfect timing because we had a bunch of payoffs come in. And we ended up doing the second one, like, I don't know, it was like 2 weeks later. And then we took there's an existing appraisal. I don't know why, like, for some reason, the lenders he was working with, they were giving him the runaround. Like the underwriting requirements were just, they kept piling on requirements with him for him all of a sudden, which is like a stalling tactic in my opinion. So that's when you need to like start looking around. But yeah, we took the existing appraisal, verified it, make sure it was all good, and then we closed on the second one like 2 weeks later, and then they're working away. But that was from networking, like just from out shaking hands. It was a referral from a good buddy of mine. Yeah.
That's awesome. Let me ask you, because luxury flips are something that I'm pretty intimidated by, and we really only look at like entry level housing. Like what does a deal cycle look like time wise? I mean, 850,000 rehab budget. How long is a project like that going to take?
So this is only a 12-month term, so we'll see. We always bake in an option to extend if they need it. They're fairly confident that they can do it. They've done it. They've done a couple before. That's how we got comfortable with it. So they're pretty confident they can do the reno and turn it in 12 months. So we'll see. We'll stay tuned. We'll do another episode.
Yeah.
Like in 10 months from now or something, and see like where we're at on that one. But
hopefully you don't have one of your episodes of the horrors of the site visit.
yeah, no. The insurance premium on that was like 50 grand.
Holy cow.
On that. So yeah, it's another thing to work into your pro forma is insurance for a big flip like that. But I mean, kind of circling back to that one, it was like perfect timing because Brock is from Rancho Santa Fe. He grew up there in that area. So he drives down that street every day. So it was kismet. It was like perfect. We went out there, walked the project, shake the borrower's hand and be like, hey, can you get this done? And they're like, yeah. And so off and running.
So speaking of Brock, when I sent you the pre-interview questionnaire, you had listed Brock as the biggest influence in your professional life. Tell us a bit about that relationship.
Yeah, Brock's a good guy. I met him through SDCIA, San Diego Creative Investors Association. I was in between, companies. I heard that he was hiring or might be hiring. And I kept hitting him up. The first day I met him, like he was like, I love the business. I was like, I hate, networking. Like, I don't know if he used like hate, but he's like, I could tell he like would rather like be at home, like, doing stuff like with his family or whatever. And so I just pursued him, and I knew that he was looking for somebody. And so I just, I kept hitting him up. I'm like, hey, like, I know you need help. You've never said no. I'm like, you've never told me no yet. And I even like tried to broker a deal through him before I came on board. And I just ran through his process, and I'm like, I'd be down to do it. So the good thing I like about Brock though is he's very patient with you, and like he'll sit there and like explain some stuff like if you don't understand it. And he loves what he does. Like, the first 2 weeks we were sitting like in the office, and his desk was right in front of mine, and he was like, I love this shit. I was like, what? I'm like, what do you mean you love this shit? I'm like, you don't love this shit? Like, he's like, no, I just eat it up. Like, I love this shit. I do it all day. I'm like, okay. I was like, all right, let's go. Like, I mean, it kind of makes you want to like go out there and like originate loans.
I'll tell you, everyone who I know who has had like a high level of success has the same mentality that it's,
Yeah.
they would do it without the money, that they're
Yeah.
just passionate about making
Yeah.
deals.
And I feel like that's kind of how I feel now. Like, yeah, I want to make like a bunch of money, but like, I just want to go like close deals too. Like, I just want to like get as many deals as I can under my belt just so I can like learn from each one and, you know, just try to help people like make money.
So Brandon, let me ask you this: looking into the future, what are your big goals? Where would you like to go on this journey?
My goal. So right now, I mean, like, I wouldn't mind being like that term, like entrepreneur. Like, maybe one of these days, if I, you know, get enough knowledge, like start our own company. But I mean, I'd rather be like, I'm comfortable like where I'm at, like being like a kind of entrepreneur. I feel like I can build like my business, like with Talimar and make like, decent living. My next step for Talimar is like, I'd love to maybe develop like a sales team, but I've never managed a sales team before. So, I'd be open to something like that, like develop a team, like, maybe San Diego, just all of California. And then, just kind of grow the fund. Yeah. I want to do some flips too.
Yeah,
Yeah.
yeah. I'll tell you
Yeah.
that's something that I often think when I see people who are like really deeply entrenched in the business is why not just do this yourself?
Yeah.
You're around so many people making the big bucks. Why not just
Yeah.
take the knowledge and connections you
Well,
have?
those who can't flip lend, you know,
I'm gonna put that on a shirt.
like those who can't flip like lend. I mean, like I'd be down to, I think I want to do like one just to be, I mean, I'm kind of doing one right now. I bought a condo in 2010. I'm renovating it to rent out. So I'm like in the middle of the renovation. It's almost done. But that gives me an idea of like the process of like managing a project and like to have a full-time job and manage a project, like even a small one, like 50K rehab, it's tough. Like you have to like call a guy every day. You have to go visit the site every day, which I didn't do, but I'm not in like a rush. But if I was in a rush, if I was a flipper, like it'd be tough. It'd be tough to like originate loans and like go to like each project, you know?
Yeah, no, I mean, I have a kind of like a obsessive approach to all the projects I'm doing. So it's like I'll go every single day,
Yeah.
sometimes twice a day, and it's amazing that you take a few days off of doing that, and all of a sudden people stop showing up, and that things slip through the cracks.
Yeah, exactly.
That there is like an extreme level of attention to detail if you want to be successful doing this kind of stuff. So pivoting away from business for a sec, what do you like to do in your free time?
My free time. So believe it or not, I train jujitsu. So
Okay.
I'm a black belt in jujitsu under my buddy Alfredo Barum, and it's been fun. Started that in like 2004. Went to Brazil a couple times, trained there. So I like to do that. I don't get to train as much as I can now, but I'm still consistent, like 1-2 times a week. And I play golf or try to play golf and travel. And then like me and my girlfriend like to cook. So yeah,
Are you from San Diego originally?
yeah, born and raised.
Do you feel like having sort of like a lifetime of experience here helps you
Yeah,
with underwriting and sourcing
yeah,
deals, that kind
definitely,
of stuff?
definitely. I used to actually have my trainee's appraiser's license in '09. Yeah, so that gave me a good idea of like kind of how to like look at ARVs and what to look for and like comp. So that gave me an advantage. But yeah, it's fun to drive down the street and see an open house and be like, oh, there's Erik. There's Erik's open house. And just stop in and like grab some cookies. be like, be like, what's up, buddy? Like, I love your project. And yeah, it's fun.
It's so funny. So when we do these projects, usually it's Max and my wife host the open house, and
Yeah.
Lindsay, my wife, basically kicks me out because she says that I'm like way too aggressive, and that the Susie Homemaker and her husband that
Yeah.
are looking at the house. I'm like, are you pre-approved? What do you think of the price? And that's
Yeah.
you need a softer touch in those
Yeah.
kind of situations. Awesome. Well, this has been a ton of quality information, Brandon. A lot of the people who watch this show are newer to the business.
Yeah.
So given all the success that you've experienced, what advice would you have to someone who's just breaking into doing this kind of thing?
Just breaking into this. So for me, I like to go to networking events. I mean, a lot of people say like go to every networking event, go to every networking event. Find a couple that you really like to go to and just be consistent with those. And then you'll eventually find a couple more that you want to do. But you can't just go to it like once. You gotta like be consistent and then like really listen to like when people are talking to you and follow up and then hold yourself accountable. So like if you are the type of person that makes calls, like, sit there and make your calls. What else? Try to learn as much as you can. Like even if you say you lose a deal, like don't think of it as a loss. Think of it as you're gaining. Like at least learn like what happened, so like you can look out for it next time. Anticipate, but never think of it like as a loss, or try not to. Like you can for like a second, but then like just get up and go find the next deal, and then like try to keep that mindset of abundance.
Yeah,
There's more deals out there.
I found that you learn a lot more from your setbacks than
Yeah.
you do from your victories. 'Cause, when everything
totally.
goes well, sometimes you don't even know how it happens. Where it's, I feel like I am great at closing deals because I know hundreds of ways that to not close a deal.
Yeah.
So it's like the more failure that you experience, the more you can sort of forecast these problems ahead of time
Yeah.
in order to avoid them. Let me ask you this. If you could go back to the beginning, what would you do differently?
I mean, I definitely would like start earlier and just like believe in yourself that you can do it. If you have enough reserves to get into the business, like you're gonna need something to fall back on, because you're not gonna make a bunch of money like when you start, but you will. Like, not to say like I make a bunch of money, but you're gonna make a good living if you just like keep at it. But you have to believe, even if like you're somebody family, whoever, significant other says like, I don't know, like it might not be, there's no money in that, or you may not make money, like they're not in the business, like they may not know that you can make money. Like if you believe you can make money in it and like you like doing it, then just jump in.
Yeah, I mean, being pessimistic costs you nothing. Yeah, a thing that I've done throughout my career is I take index cards and I write down my goals, and I post them up on the wall, and I look at them all the time. And it's really cool that basically all of this comes true.
Yeah.
It's like there
It's
really
kinda
is
weird,
something that if you just have
you know?
this delusional self-belief, it's like you don't need to know how to do it. You just have to believe it
Yeah.
and consistently, take baby steps
Yeah,
towards it.
just keep moving forward. But so you are a broker, were a broker, or you're a broker, right? So some tips, like I'm just curious, like how did you get
So,
going? And like what made you decide to be a broker?
I have had pretty much like every crappy sales job that you could have.
Name a couple.
When I was in college, I was one of those people who would interrupt you on the sidewalk and try to convince you to, save the rainforest. I've been the guy in the grocery store handing out samples.
Okay.
I've had tons of different jobs, cold calling people, and I've just sort of always had a knack for sales.
Yeah.
I think that I am comfortable being pushy enough. And that's really what it takes is that you have to be polite but pushy. And that, for me, commercial real estate was just like the highest and best use of those skills. So we, I worked for a big company for almost 10 years. And then eventually it just made sense to start our own company.
When you were working for that big company, did they just like give you a leads list and you just start calling people, or
They didn't really give us anything in terms of business development.
Yeah, so that's like one of the hard things in getting started is like, like how do you get started?
I think there's like, it sounds cheeky, but there ain't nothing to it but to do it.
Yeah.
Is that you just have to get out there and start doing it, and that Something that I was telling my team today, I have 4 brand new agents that
Mm-hmm.
I'm training, is that the the anxiety and the feeling uncomfortable is good.
Yeah.
That is like, you should do that every day. And like, when you're walking up someone's driveway to go knock on their door and you're nervous, like, savor that moment, because it's
Yeah.
the fact that you can tolerate that discomfort puts you ahead
Yeah.
of everyone else. So, I mean, I would say that my success in brokerage has not come from being better or smarter than anyone else,
Yeah.
but it's just that I can experience being embarrassed an unlimited amount.
Yeah. And then, yeah, I agree. You do get embarrassed quite a bit. And then, but then, like, you realize, like, people forget about it like an hour later.
Yeah,
So it doesn't really matter.
I yeah, I always think about this is that you just have to remind yourself that everyone pretty much only thinks about their own perspective and experience, and that, you might leave a meeting or an event and be like, oh my gosh, I can't believe I said that, or I did this, or I, told this person this thing. And it's like, no one is really paying attention.
That's what it seems like. Yeah. Yeah, they're not.
Awesome. Well, any sort of last kind of interesting anecdotes about your real estate career that you'd love to share with us?
Any interesting anecdotes? I think that comes to mind. Well, I'm curious. So you said you had like um, a strong history in sales, like before real estate. Like, what was your like favorite job? Like,
Oh man,
did you have a job that helped you? Like, you think helped you the most in commercial like brokerage?
So I worked when I went to college in San Francisco. I went to San
Uh-huh.
Francisco State, and I worked for a tech startup called NoteHall.com. They were actually a Shark Tank company,
Hmm.
and I was the one of the top salespeople there. And we would get an internal database of people who had filled out forms on the website who wanted to be contacted, and I noticed that women converted way higher than men, and that we would get a lot of applications from international students, and that those were super difficult leads to close. So I would get in like 30 minutes before everyone else, and I would cherry pick through the database all the Rachels and Jessicas and Ashleys and Tiffany's and Sarahs,
Smart.
and I was getting like 100% hit rate on the people I
yeah.
was calling, because I knew how to better target and qualify leads. And I would say that has been invaluable in real estate, because I think the reason that a lot of people don't achieve the success that they're looking for isn't that they're not working hard enough. It's that they're wasting a lot of time on deals that are going nowhere.
Yeah. Yeah.
And that
I
they're
agree.
not good at having those uncomfortable conversations on the front end. It's when I first started, I did a lot of what's called tenant rep, where you're working with a business owner to help them find a space for lease. And oftentimes these people don't qualify. They don't have any
Yeah.
money, or their credit sucks, or
It's bad
something
deal.
else is going on. And you can spend 2 or 3 months running around with them, touring tons of spaces, only to get down to making the deal and realizing they have no qualifications. Whereas I learned super quickly, it's like on the very first phone call, how's your credit? How much money do you have? Which that's like an uncomfortable conversation, especially with someone that you barely know. But it's, I would rather be uncomfortable in those first 30 minutes than waste 60 days
Yeah,
with someone who's
absolutely.
never going to close.
Yeah. Yeah. It's at the beginning of my career, it was really hard to say no because I wanted to close a deal, you know? So I would like waste time and like, oh, let me get this doc, let me get that doc, and like try to push it through, like, oh, let me see if I can like get the credit team to okay this, but I know they're gonna say no. But when a good deal comes across your desk, you're gonna know it, and then like it's just gonna flow, type of stuff.
And I think it also speaks to your credibility that if you're trying to represent someone who is not a good person to lend to or to rent to or to work on any kind of transaction with, that it shows your poor lack of judgment. Whereas, there are certain brokers in town where if I have a listing and they bring me a buyer, I am super confident in the deal just based off my trust in that broker. And on the flip side as well, is that I've had agents who completely flaked on deals with me. And it's like, if they bring me an offer now, I'm like, yeah, dude, with a $100K non-refundable deposit, we will work on the deal with you.
Cool. But I think the job that most prepared me for real estate was selling, like, I used to sell car service, like for Honda. And just getting to know like each type of customer, and like kind of when they're getting frustrated and when they're, when they're like in a agreeable state. Like, I don't know, that really, I feel like trained me to be good in sales.
Yeah, I think it's and it's a mistake that a lot of salespeople make, is that it's really not about what you're selling. It's much more about who your prospective customer is, and that you have to meet them where they're at. And I think that a lot of salespeople spend way too much time talking when they should spend more time listening, because someone might mention to you something that completely eliminates option A. And if you're just there bragging about all the features and benefits of option A, you're wasting their time. Whereas, option B may be the perfect solution for them, but you're not going to realize this unless you're paying attention.
Yeah, absolutely.
So before we wrap up here, Brandon, for someone who is looking to work with you, who are you looking for? What would be the corresponding puzzle piece to your business?
I'm looking to work with brokers, commercial or residential, who are looking, well, for residential it would need to be like a non-owner occupied, like investment property. But also I'm looking for, experienced investors that have some money to put down. Like, we're not going to be like the 100% financing guys or 5 or 10% down. We're going to be like, 15 to 20. So somebody that, is willing to come in with some down, but also know that, we're not the cheapest in town, but we're going to be, quick, efficient, and responsive. And I'm also looking to work with, new flippers or new investors. I feel like I've really helped a lot of first timers kind of walk them through the process, get pre-qualified, even send them deals, find them a deal. So yeah, like first timers, it's kind of like my niche right now. And it's fun. Like, you end up developing relationships with these people too, and like they're becoming friends and stuff. So
yeah, it's interesting that you mentioned that, because something that I've found to help a lot in my career is that in the beginning I didn't shy away from working with people who are newer first timers, because you never know where someone's going to end up, and that it's like there were clients who in my first year in the business, I wasted a bunch of time and they didn't buy anything, and then 5 years later they still remember me and they call me, and now they got way more money and they're looking to do deals. So it's I think you want to be really critical with qualifying people, but you don't want to just overlook someone.
Yeah, never. Always. And then like it doesn't matter how small or big the deal, like 250 to 5 million, I treat every deal like it's like $1 million, $2 million deal. So
awesome. So in terms of people reaching out to you and getting in touch, what channel is best for people to get a hold of you?
Just give me a call on my cell phone, 619-857-9734. Or you can reach me at my Instagram. It's a wild one. It's at Brandon from Talimar. So
awesome.
Keep it simple.
Yeah. Well, Brandon, thank you so much. This has been great.
I appreciate it, man. Thanks for having me.
Alrighty, well, that is a wrap of episode number 7 of the Easy Deals podcast. Stay tuned, and we will catch you next week.